As the leader in the ancillary cannabis sector, we believe the combined company will be strongly positioned to provide enhanced product offerings and expanded ancillary services to our valued customer bases, while growing profitability and maximizing value for all consumer brands and products, ranging from consumption to industry. As the leader in the ancillary cannabis sector, we believe the combined company will be strongly positioned to provide enhanced product offerings and expanded ancillary services to our valued customer bases, while growing profitability and maximizing value for all shareholders. It is our belief that ancillary cannabis companies with scale, product range, and innovation expertise are most likely to benefit in the long term, and we believe this transformative transaction checks off all the boxes and will deliver sustainable and attractive returns for our shareholders. Now with that, let's jump right in and turn to slide 3 of the supplemental presentation, where we provide an overview of the strategic rationale for this transaction. One of the major defining points of this transaction is the fact that we are combining robust, differentiated, and innovative offerings, including company-owned brands and exclusive third-party products, to create a comprehensive, best-in-class product portfolio. The combined company will become the leading supplier of premium consumer brands and products, ranging from consumption devices and vaporizers to child-resistant packaging, papers, solvents, and related merchandise. And the beauty of this is that both Greenlane's and Kushco's product offerings and customers complement each other very well, allowing for tremendous cross-selling opportunities. And speaking on behalf of the Kushco team, I can say that we have admired for quite some time the product and customer profile that the Greenlane team has built. And seeing the equal respect the Greenlane team has shown us over the years, I know the feeling is mutual. It's worth noting that these cross-selling opportunities exist across the entire value chain, from some of the world's largest cannabis operators to leading retailers and all the way down to end consumers. Whereas Kushco has excelled in serving the upstream market of growers, processors, and brands, Greenlane has done a phenomenal job building out its downstream market of retail and direct-to-consumer channels. Together, we are strongly positioned to be the partner of choice to a large and rapidly growing global customer base. The combined company will serve a premier group of customers, which includes many of the leading multi-state operators and Canadian LPs, the majority of the top smoke shops in the U.S., and millions of consumers. We will also be well positioned for expanding our go-to-market channels even further as legalization expands and additional retailers carry more of our products. The combined company will not only have substantial breadth from a customer and product offering perspective, but just as importantly, from a financial perspective. In fact, on a pro forma basis, the combined company generated approximately $250+ million of revenue in calendar 2020, with a pro forma market capitalization north of $350 million as of March 29th. Following completion of this transaction, we believe the combined company will have a strong platform for accelerated organic growth and should be well positioned to capitalize on attractive market opportunities as the industry further evolves. This platform includes both the potential revenue synergies I highlighted earlier, as well as significant potential cost synergies that should enable us to improve margins and enhance profitability. We're expecting the improved operating leverage and enhanced scale of the combined company to drive approximately $15 to $20 million in cost saving synergies within 24 months of closing, as well as providing a strong trajectory for increased profitability. These synergies are expected to be realized from economies of scale, an optimized distribution network, and reduced operating expenses. And we're not planning to stop just there. Our goal is to create an ever-expanding and robust platform that can drive business accretion for our stakeholders for many more years and decades to come as we integrate the two businesses and leverage the enhanced strategic position and financial profile of the combined company. And as I touched on earlier, the transaction comes at a pivotal time in our industry where multiple tailwinds are converging, from customers rapidly gaining scale to new states legalizing cannabis, and even the potential of full-blown federal legalization, which has never looked more likely to materialize than it does today. Our joint platform positions the combined company to capitalize on these tailwinds across multiple geographies and to accelerate the growth both companies have experienced on a standalone basis. Ultimately, we're bringing together two of the pioneering cannabis ancillary product and service companies with a combined 25-plus years of operating history to catapult the combined company into significantly stronger positioning in this next stage of the industry's evolution.